Good morning, bulls and bears, and welcome to today's market update. Let's look at the key developments across the US dollar, crude oil, gold, and the Australian dollar. The US dollar index traded just below 98 last week, near a 2 week high, supported by a broad sell off in stocks, commodities, and cryptocurrencies. Investor demand for the dollar has strengthened since President Trump nominated Kevin Warsh as the next Fed chairman, given his preference for a smaller balance sheet and cautious policy easing. Economic data offered mixed signals. January's ADP private sector employment rose by only 20,000, well below expectations, highlighting a slowdown in the labor market. However, CME futures suggest a higher probability of the Fed holding rates steady in March, which supported the dollar. Technically, the index remains range bound between 97 and 98.69. A sustained move above 98 could signal further upside, while a drop below 97 may open the door to lower levels around 96.12. Overall, the short term rebound is strengthening, but medium term trends remain unclear. Oil prices were volatile last week, influenced by US Iran negotiations and geopolitical risks in the Strait of Hormuz. Early week optimism on talks drove prices lower, while midweek concerns over potential negotiation breakdowns pushed prices higher. EIA data showing larger than expected declines in crude and distillate inventories provided additional support. Technically, the main trend remains upward. Prices are testing resistance near $66, with support between $61 and $60. A break above 66 could extend the rally towards 68.97, while a fall below $60 would signal a potential trend reversal. Short term momentum is balanced with the RSI in neutral territory and the MACD slightly bullish but weak. Gold saw significant volatility, dropping sharply before rebounding to consolidate above $4,600. The pullback followed margin driven liquidations in late January, but the medium term bullish structure remains intact. Geopolitical tensions and concerns about the Fed's future policy support the safe haven appeal of gold, though expectations for a less dovish Fed could limit upside. Technically, support lies in the 4,600 to 4,650 range, with the resistance around 4,865 to $5,000. A sustained move above 4,865 could open the door to last week's high near $5,092 and potentially beyond. The Australian dollar rebounded above 0.70 after earlier pressure from a tech driven sell off and risk aversion in global markets. The RBA raised rates to 3.85% and indicated further tightening is possible if inflation persists. Technically, the pair is trading in an ascending channel with support at 0.6865 to 0.69 and resistance near 0.705. A decisive break above 0.705 could target 0.7094, while a fall below 0.6865 could see the pair testing 0.68. Short term momentum favors a rebound within the overall range. In summary, the US dollar shows consolidation with potential for further upside. Oil remains in a delicate balance between supply risks and geopolitical signals. Gold continues its rebound within a medium term uptrend. And the Australian dollar is showing signs of short term strength after recent weakness. That's your market update. Happy trading.